this is the first one of these, or the first series of these that I'm doing, just to give a little bit of background to you. So when I first came over here, I copied a model that we started in Australia where we would host monthly dinners for leaders of public companies. That started out of essentially just my proclivity in Australia for meeting people over lunch and dinner. It was a great way to hear people's stories, learn about the market, and selfishly get our name out there a little bit. What we realized accidentally was that there doesn't really exist a genuine community for leaders of public companies. And it turns out that in the UK, people quite like going out for dinner and lunch as well. And so we started doing that. As you know, you came to one of these dinners. You've been to multiple?
Two now.
Two now. Yeah. We then started doing a newsletter where I would, to that group, and there's about 500 as part of that group, would share some of the stories that are coming out of my conversations and these dinners. And then more recently, I've had some requests from members of the community to hear firsthand some of the stories behind those newsletters and coming out of those dinners, and get to know some of the public leaders that are their peers. And so that's the background to this. Similar to the dinners, this is a strictly no selling conversation. So I'm not allowed to sell InvestorHub in any way. You're not allowed to sell Adsure. You can sell an InvestorHub if you want, but no selling in general.
I can follow those rules.
And so what we really want to do here is talk a little bit about your experience and background as a public leader. I then want to talk a little bit about specifically some work you've been doing around shareholder intelligence, because I think that's quite interesting. And then we can see where it goes from there. But maybe firstly, for people listening to this that don't know you, do you want to do a little bit of an introduction to yourself?
Yes, so my name's Kevin Limn. I am the Chief Executive of Adsure Services PLC. We are still, I suppose, a relatively new public listed company. We IPO'd on the AQUIS stock exchange in October 2023. Adsure is the parent holding company of a trading subsidiary, which has been operating now for just over 30 years, providing specialist business assurance services, predominantly to the UK public sector. Me as a person, well, I'm a qualified accountant, if you won't hold that against me. It was a necessity of my profession before the IAA took its own individual standing as a certified qualification. I've worked within the group companies for 20 years now. So I actually had the pleasure of starting out as a trainee many years ago, management trainee, fresh out of university, and have found myself now as chief executive of the company. I was actually asked this morning how that happened, and I did struggle to answer that question, but it has happened, and yeah, it's been an exciting journey.
And so you've been a public leader. So the company's been public for almost 2 years?
Yeah.
Almost 2 years. In that period, what has been the best piece of advice that you've received? And then afterwards, I'm going to very quickly ask you the worst piece. Let's start with the best piece.
I'd say it's quite simple, actually, but it's to trust your own judgment. If you've been doing something for a while, if you're in a position for a reason, I think when you enter into a new space, it can be quite easy to look to others for guidance and support. It's an entirely new world. For some people, they'll have been through other IPOs that have worked in other public companies maybe. From my perspective, I hadn't. And I think actually that doesn't mean that your judgment still is incorrect. And having that ability to be confident in your opinion and your judgment in terms of why your business is doing what it's doing, why it's going where it's doing, and why its strategy is set out that way is critical. And yes, you need to listen to others, but you don't need to let them form or shape your opinion of where you are going to go.
I've had this explained to me before as adjudicate, don't abdicate. And so like as a chief exec, I imagine you know a great many things, but I imagine there are many aspects of the business where you're not a subject matter expert. Like you might not be a marketing person or a tech person, but your role as the chief exec across all of them is to synthesize the best possible advice and inputs from your team and external advisors and make a decision. And it's not dissimilar in public markets. You take that all, but then you ultimately, the reason you're in the role is because your decision making is very good. And so it's sort of the same concept.
And that's an interesting concept because I think the perception that decision making is very good in some people means that there's an assumption that you make the right decision. And I'd frame that slightly differently. So firstly, I think it's understanding whether or not a decision is necessary immediately or not, because sometimes the best decision is to think about it and not do anything. And in other times, you do need to take a decision. Now, you might not have a fantastic set of options in front of you, but you might have a least worst option in terms of your immediate course of action. But actually also having the humility to look at something and say, this isn't actually going in the right direction, and change track and take people on an alternative journey is just as important.
Yeah.
And so, yes, I think having the confidence to take a decision is probably a better way of framing something than always getting the decision, or perception that you always get the decision correct.
Do you have, and you might not want to answer this or might want to heavily de-identify it, but do you have a situation, just very quickly, a situation where you don't, as a public leader, you don't feel like you backed your own judgment enough, looking back over the last 2 years?
I think when we first, it can be quite overwhelming. You suddenly have an awful lot of additional noise coming into your business. You collect a lot of different advisors. There are a lot of different people wanting to take some of your attention, potentially looking to steer you on specific directions. And if you're not fully prepared for that outside noise, that can, I wouldn't say necessarily makes a wrong decision, but it can distract you from the things you actually need to be looking at. And yes, you need to invest an additional amount of time into your investor relations, looking at your corporate governance arrangements, speaking to your auditors or whatever else that might be. But you have still got to do the role that you were doing in terms of running your company. And you need to make sure that you don't get distracted. I wouldn't say that's necessarily directly the experience that I had, but I could see the potential for that to happen.
Okay, that's fair. And what about the worst piece of advice you've received?
The worst piece of advice I've received, very good. So I won't be specific, but I've still now. So we had a unique situation. We floated on the AQSE exchange. We didn't raise any money. Yes, at some point in the future, we will want to access additional capital to facilitate different parts of our growth strategy, but not immediately. And I guess I've been steered in the direction of maybe looking to do that sooner than I need to. And we haven't done that, but I think I could have fallen into that trap if I hadn't have been slightly more thoughtful.
And we can... bear in mind, we can cut anything out. So like what I'm saying now, we can cut out. But to expand on that, is that the advice you're receiving might have been something along the lines of, you list, you need to create a market. One way to create a market is to introduce new supply. The other is to introduce new demand. And you're saying maybe you were steered more initially towards creating new supply?
Yeah, I think that's fair. I think that's fair. And then you actually lose one of the key benefits of our company today, which is we have a tight shareholder base. We have a lot of control over our share register. Yes, that means we have a lower level of free float, but at the same time, we have a fairly good understanding of the direction our shareholders want the business to continue to go in, and they'll be very supportive at the point that we want to do something more dramatic. But to do something for no reason may actually jeopardise your ability to do things when you do need to do them. So.
Well, it sort of comes back to your first point as well, where about trusting your own judgment. You sort of had a gut feel on what the right approach was, and even if don't be afraid to push back on every opinion you receive, and do the one that you think is the best for your business in that moment in time.
Absolutely, and that will be different for different people and different organisations. We've been trading as an organisation in one form or another, as I say, for 30 years. We're not coming at this new. We're not trying to dramatically, bring something to market or create market share overnight. So we don't, I suppose to use cricket analogies, we're not in a T20 innings here. We're playing out for a 5-day test match. We can take a bit of time to ourselves, look about how we want to judge our surroundings before we maybe to pick up a pace towards the back end. And I think that's probably where we've been. And now that we feel that we're a bit more established, we're a bit more confident in our decision making and the judgments that we want to apply, I feel like we're better situated now to maximise the benefits of the environment that we're in.
And so you mentioned before what you say is one of the advantages of the business now is your tight register. I want to talk a little bit about that in a second, but before we get to it, just very quickly to end this sort of topic, one rapid fire, or one, it can be three if you've got three, but one rapid fire. You've been in the seat for 2 years, a relatively new public leader. If someone is considering listing today or has just listed, what would be one or two bits of advice you'd give them?
First of all, build a network. Find a way to access people that have been through those experiences and can talk to you about the things that work well, and equally and more importantly, sometimes the things that don't work well. Use that to then build, I suppose, a trusted environment and network where you feel open to be able to communicate about those things. And finally, just don't lose sight of why you did that in the first place.
That's good advice. Yeah, I think you could almost add to that. Something you said to me in a separate conversation, which I want to bring back up, is just not being afraid of failure. I think that you are heavily penalized for failure in public markets, which is fair enough. That's how it works. But you learn a lot more in those situations.
Yeah, and I think then you're just managing your risk, aren't you?
Yeah, no, definitely. So shareholder intelligence. I know because we've been doing this with you, but I want you to try and disassociate InvestorHub a little bit. You've been on a really interesting journey since listing, unpicking shareholder intelligence, which if I could frame that for you, or for people listening, is figuring out who your shareholders, your beneficial owners actually are and how they have been moving or trading in response to things that have been happening in the business and the market. What has worked well in that process?
Timeliness of information is critical. So if you look at our share register, which is a publicly available document for a small amount of money, you'll see fewer than 15 lines of information on that register. So where there are trades in our stock, you can quite quickly look at what's moving. What's also interesting about our share register is that we have a reasonable number of certificate form holders still who haven't dematerialised their stock. And so you're pretty confident around what they're doing with their shares. So the rest sits in quite a small number of nominee holding accounts. And given, as I say, from the point of IPO, we have a fairly good handle on who the people are and what their holdings are within there. You can quite quickly start to work out who you think may be selling or who you think may be buying, but you're not always certain. And that brings with it a number of challenges. We have quite an engaging shareholder base, so if they have the option to take part in corporate actions, that's something that they're very likely to seek out the opportunity to do.
Yeah, okay.
So it's critical that you know what they hold and what their voting rights are, etc., when you're coming around to your AGM or things like this.
And how difficult or easy have you found it to access that information?
I have to be honest with you, and I'll be quite frank on this topic. It baffles me how you can have a responsibility to know who owns your shares on any given day, and yet that information is not freely available. So without running into some sort of a sales piece, having the breakdown behind the nominees, having that integrated into one place is extremely effective. And the more and closer we can bring that to real-time integration, the better. Because if there is a change, then you need to know about that. And you need to understand why. And you need to look as if is this linked specifically to something that's happening within the company? Or is this linked to something that's happening from a personal perspective of that shareholder? Maybe they need to cash in or whatever that might be. But that level of intelligence is really important.
And couldn't agree more. And again, no selling, but yes, it's very important. And I'm glad that we've been able to help with part of that. But I think there are structural limitations to getting there, as we've discussed off camera before. And I think the next step is getting more of us together to start talking about it more publicly in forums like this and the dinners and many other places, because we need to change the law. We need to change the system to make this is now I'm editorializing here a little bit, but we need to change the system. The system does not exist here. We've talked about compared to Australia before. Like in Australia, you can log into your share registrar and see T+2, but you can see, compared to what we get, pretty much live, how people are moving. And the benefits of that, which you've said, are like, one, you've got to know if you're running a public company, why things are happening. And then also to measure the success of things you're doing. And then thirdly, to your point, if you've got a corporate action coming up or you want to talk to people or whatever, being able to reach them directly and talk to them is absolutely essential. So I think there's a lot we can do, but really we need to change the rules.
I agree entirely. And if you step back from it, I'm yet to meet a fellow public leader that's been happy with their current market cap.
You could probably say that about every company in the world, though.
Well, absolutely. But if I look at our own perspective at the point since listing, and there have been benefits, so this isn't to say it's an overwhelmingly negative experience, but the current valuation of the company is a problem, and that doesn't reflect the positive movements in profitability and turnover that we've seen since listing. And so I need to understand why that's being reflected in the position it is. From a supply or more so a demand perspective. We have an interesting dynamic in this country as well, where there's an obligation almost to provide liquidity, which is a complicated scenario.
Wait, sorry to interrupt you there. An obligation on the issuer to provide liquidity?
Well, I think the market makers have a degree of obligation to buy and sell at particular prices, don't they? So they are there to facilitate liquidity to the market effectively. And that's difficult on an exchange that has quite low liquidity at the moment. Not in all stocks, but in some stocks. So it's quite a complicated situation that you're trying to work your way around in terms of who's actually setting your price and to what extent do your shareholders actually support that current valuation.
Yeah. And so for someone who, let's say, public leader listening to this, that is not able to access who all of their ultimate beneficial owners are, which is most. They might be able to look at the sort of 15 that you see on the high-level members list, but who is not able to pierce those nominee holdings and figure out who they are. You've started going down that journey. Are there one or two or three bits of advice you'd give to a public leader who wants to start figuring out what's happening?
Well, I would say that they're on the right path, because the more information that you can get to understand the behaviour of your current shareholders or your current investors, the more you can then sit back and assess what you're currently doing, what your current plans are, how you're currently communicating with the market, and refine your approach accordingly. Otherwise, it feels to me that you're kind of throwing a narrative and you're not understanding to what extent it sticks. You know, if you go out there and your primary role in your operational side of your day-to-day is lead generation or contract conversions or something, you've got a metric there that you can stick to around how well your message is landing, or the brand or the strategic vision that you're pushing with the product or the service that you're selling. So if you flip that on its head and look at that with potential and current investors, then you absolutely need to understand the sentiments of the market. How is what you're saying reflecting? And what I don't mean by that is sit on messaging boards, because that's not the place for anyone to exist.
Emotionally draining.
Yes, you're not going to sit in an overwhelmingly positive and supportive environment there, and that's not going to be a fair reflection on the entire market or people that may have interest. I think the next thing there is that we've got such a closed, small community of particularly when you look at retail investors, that you need to be in a position to think a bit more dynamically. I've heard a statistic, it's such a small percentage of the UK population that actively have or maintain their own personal sort of retail investment portfolio. I think it's less than 10%, I can't remember the actual number. But Therefore, everyone's after that small crew of people. So how can you broaden that pool with people that already have some level of active engagement with your business?
Or differentiate, right?
Yeah, well, absolutely.
If everyone's going after the same pool in the same way, then it would not make sense to be one of many. It would sort of make sense to counter-position a little bit and think, well, how do I get more to meet these people more in the way they want to be engaged or at their level or whatever the right phrasing is.
But whilst also remaining true to that vision in terms of
Right.
where you think you want to go. So that doesn't mean you suddenly need to completely reinvent your business just because you think that's what a retail community is going to need. How can I make the story behind my company sit differently to others? And in doing that, I may actually take a risk that I exclude a percentage of that community, but I might over-engage almost with a different part. And that may in the long run be more beneficial for an outcome of interest and longer term holding of stocks in your company.
Well, look, I'm sure we could talk about this for hours, but thank you for having this brief chat with me and testing this new format. We always have good conversations about this, so I hope that people listening and watching this take something away as well. But yeah, look, if you're happy, if people do watch this, they're a public leader and they engage with something that you've said, are you happy for them to reach out to you?
Absolutely, more than happy.
And your credentials are freely available on the internet or LinkedIn, so I'm sure they can find you. But anyway, thank you for sitting down with me.
Thank you, Alex.
Cheers.